Welcome back to Alpha Recap, your after-hours market wrap from stockalpha.ai. We closed the day with a pretty familiar story. Big tech and AI names led while smaller and cyclical names struggled. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today's tape, especially around AI momentum and that narrow leadership dynamic.
So let's jump in. Quick headline first. Markets closed with the S&P 500 up about 0.6% and the Nasdaq 100 finishing up about 1.3%. The Russell 2000, meanwhile, closed down about 0.4%. Big cap strength, small cap weakness. What's your high-level read on that split?
When you step back and look at this, it was classic concentration. A handful of mega cap, AI-exposed names drove headline gains while a large swath of the market lagged. That pattern shows up in breadth. Lots of average names were flat or down even as indexes ticked higher.
And the number that really caught our eye was the Nasdaq 100 outperforming the S&P by roughly 0.7%. That's meaningful in a single session.
Right. That gap tells you flows were concentrated into technology, communications, and ad-linked platforms, areas where AI monetization is already a clear story.
Okay, let's break down why that happened. First driver, corporate news and earnings. Alphabet reported midday and came in with revenue beats and upbeat commentary on AI demand. How did that ripple through the market?
Alphabet's update was a catalyst. When a major ad and cloud platform talks up AI monetization, it gives investors confidence that both ad tech and cloud services will see more spending. That boosted not just the platform operators, but the semiconductor and infrastructure suppliers that service AI data centers.
So Alphabet was the engine, and its suppliers got pulled along.
Exactly. NVIDIA continued to lead that narrative too. Renewed optimism that its chips remain central to data center builds pushed demand expectations higher. Analysts are positioning around second-half CapEx for AI.
Let's talk rotation. Communications and media looked good today, right?
Yeah, communications and media were the clear winners. Ad trends look firmer, and companies that combine advertising with AI-enabled services got premium multiple treatment. The market rewarded businesses that can monetize engagement through AI enhancements.
And at the same time, small caps were under pressure. Why were smaller names struggling while the big tech names rallied?
Two big forces were at work. One, profit-taking in speculative small-cap names after their recent run. Two, persistent concern about financial conditions for smaller firms that rely on external funding. If funding is tighter or more uncertain, smaller, debt-dependent companies feel it first.
That explains the negative breadth beneath headline gains. It feels like a market where a few winners mask a lot of individual losers.
Yeah, that tracks. And from a portfolio standpoint, that concentration raises questions about sustainability. If flows stop favoring megacaps, indices could retrace quickly because the internals are thin.
Let's move through sectors quickly. Communications and media, winner. Technology and semiconductors, strength tied to AI. Real estate, mixed. Utilities, flat to slightly negative. Energy, idiosyncratic. Materials and industrials, mixed. Financials, active but mixed. Any surprises in that list for you?
Not really. What I found notable was how selective the moves were inside each sector. In real estate, REITs with secure cash flow did well, while mortgage-sensitive names lagged. In industrials, some miners rallied on project wins, while others fell back on demand concerns. That selectivity fits the broader theme of dispersion.
Got it. Now, let's go through some notable individual moves. Alphabet was a headline mover. NVIDIA kept leading. CVS had a bump on payer margin commentary. Tesla showed weakness with shorts reloading. Intel was getting scrutinized ahead of earnings. Anything to add on those?
Alphabet's beat pushed ad tech and cloud chains higher. NVIDIA's ongoing leadership reflects the central role of its chips in inference and data center builds. CVS benefited from better-than-expected payer commentary, which fed defensive healthcare interest. Tesla's weakness was more technical and sentiment-driven. Short interest and deteriorating technicals amplified intraday moves. And Intel is in the spotlight because its earnings are being framed as a test of whether legacy and data center cycles are capturing AI demand.
I mean, when you mention Intel, options activity and implied volatility rising into a print was pretty telling about how traders are positioning for that report.
Totally. Elevated options activity usually signals event risk. Traders were hedging or speculating ahead of the earnings release, which pushed near-term volatility expectations up.
A couple more names. GE Vernova had selling pressure despite some demand indicators. KLA and equipment names saw interest as plays on AI capex. KKR and some financials got attention around alternative asset valuations and fee momentum. So, a mixed bag.
Exactly. The common thread is that flows are thematic. AI and recurring cash flow stories are getting premium treatment, while anything that's capital intensive or funding sensitive is being parsed more carefully.
Let's simplify a few of these market mechanics for listeners who are newer to this. Breadth. What is it, and why does a narrow leadership base matter?
Breadth measures how many stocks are participating in a rally. If only a handful of large cap names are up and most stocks are flat or down, breadth is weak. A narrow leadership base matters because it makes the market more fragile. If those few names stumble, the headline indexes can fall, even though most stocks were never strong to begin with.
So even if the S&P looked fine, the underlying internals told a different story. Short reactions.
Right.
And on the Fed and macro front, there wasn't a new big data print today, but the backdrop of recent steady inflation readings and cautious Fed messaging played into this. How did that shape flows?
Markets are pricing a slower path to rate cuts than the most optimistic scenarios. That favors companies with clear secular growth and cash generation. Basically, the big tech and AI winners versus businesses that are sensitive to borrowing costs. So the Fed's message of being data-dependent and patient supported the large cap bias.
Which connects back to why small caps with funding needs were weaker. Right. A quick historical note. This narrow leadership is reminiscent of prior AI-led runs where indices looked good, but internals were weak until earnings broadened or macro data forced a repricing.
Exactly. In past cycles, breadth only improved when earnings momentum broadened beyond mega-cap software and platform names, or when macro conditions changed enough to shift flows back to cyclicals and mid-caps.
Okay, practical outlook. What are the things to watch in the next session?
Number 1, the earnings cadence. Intel and other big names are coming. Their results and forward guidance will determine whether today's mega-cap bounce broadens. Number 2, any surprises in economic data or Fed commentary could quickly change the tone. Number 3, sector flows. Whether communications, media, and equipment names can hold inflows. Number 4, technicals and breadth. We want to see more advancing issues than decliners to call this a healthy rally. And number 5, thematic crosscurrents like AI talk in crypto or real estate lease news, which can create headline-driven moves.
Short reaction. Yeah, absolutely.
Honestly, I was a bit surprised by how concentrated today's gains were, even with a major name like Alphabet beating. It shows how much the market cares about the AI narrative right now.
Quick technical point. The Nasdaq 100 broke higher intraday and finished relatively strong, but breadth under the surface was mixed to negative. So technicals gave a positive signal, but the internals were a warning flag.
Yep, traders will be watching whether that breakout attracts follow-through across more names or if it remains a narrow rally. If the latter, vulnerability to a pullback increases.
Before we wrap, let's hit the bottom line takeaways. 1. Leadership was narrow. AI and big cap tech led the tape while smaller caps lagged. 2. Alphabet and NVIDIA helped power the advance, and thematic flows into AI continued to dominate positioning. 3. Macro and Fed messaging favored growth that's less sensitive to funding costs, which amplified the split. 4. Breadth remains the key watch. We need more names to participate for this rally to feel durable. Any final framing?
Just to add, analysts note that momentum favors AI and large-cap secular stories, but technicals and macro sensitivity mean rotation and volatility are still very much possible. Use that as a context for managing risk rather than as a directive for action.
Perfect. Quick reactions. Right, got it. Thanks for walking through that with me. Final reminder for listeners. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks, everyone. And remember, this episode was informational. Analyst note and data suggest the trends we discussed. This is not personalized investment advice.
All right, that's it for today's Alpha Recap. See you next market close.